I might lose it if I see one more video about how the sky is falling because Fannie Mae removed the minimum credit score requirement. The number of videos that I have seen about how this is going to totally crash the market is so ridiculous, and let me explain why. You're never going to get approved for a home loan if you have horrible payment history and a horrible debt to income ratio, regardless of what your credit score is. Most people don't realize this, but USDA and VA don't have minimum credit score requirements and haven't for years, possibly ever, at least not since I've been in lending. And it doesn't matter. You're still not going to get one of those loans if your credit sucks. People are not denied for a mortgage because their minimum credit score is below the threshold. People are denied for a mortgage because they don't qualify because they have payment history showing recent late, crazy high debts, collections, charge-offs, bankruptcies, things like that. So no, the sky is not falling because Fannie Mae is no longer requiring a minimum credit score. They are just simply saying that's not a factor when we're running AUS findings or automated underwriting system findings. If someone were to get approved with a credit score less than 620, which used to be the threshold, that would mean that they would have to have solid payment history, or they would have to have a very large down payment, or they would have to have a really low debt to income ratio. And if that's the case, they likely don't have a credit score below 620 anyway. But just for fun, let's say somebody has a credit score of 570 because they have horrible payment history, but they have a really large down payment, at least 30%. Let's say they also have a fairly low debt to income ratio, including the new house that they're buying. Maybe their debt to income ratio will be about 30%. In theory, this would let them technically get approved with a conventional loan, but the pricing for that loan is going to be based on their horrible credit score. Their interest rate is going to be outrageous, and they will likely be charged additional fees. So they will often be better off taking the extra money that they have that they were going to be using toward a down payment and focusing on improving their credit scores. So just to make it crystal clear, if you're one of those individuals that has a credit score below 620, which used to be the threshold, in order to qualify for a mortgage, you would have to have other compensating factors. And that would be a large down payment, reserves, and a low debt to income ratio. Again, you're not going to be approved with a low down payment, bad credit, and high debt to income ratio. None of the other underwriting guidelines changed. It's just that they're not looking at minimum credit score anymore. You still have to meet all of the other requirements. So again, if you see somebody talking about how the sky is falling and the market's going to crash because Fannie Mae is not enforcing minimum credit scores anymore, just know that if that person is in fact actually getting approved to buy a home, they are buying the home because they have put down so much money, they've got so much equity that even if they choose not to pay their bills, they will still be able to sell that home and be money up.